Hi friends, my name is Vinod Kumar Agarwal and I'm going to tell you about our social media platform where you can subscribe, like, share and you'll get a lot of video updates. Our YouTube channel is AS Foundation Pune, our Instagram channel is AS Foundation, our WhatsApp number is 9766921860, our Facebook page is AS Foundation Pune. So please subscribe, like, share with your friends and get a lot of free videos and updates. Please visit our website asfoundation.co.in where you will find all great faculties in our countries. They are selling our products on our portal and you can get a lot of free discounts, gifts and purchase from our website asfoundation.co.in. Thank you for watching this video. All the best.
Yes, so very good afternoon. Right, so how many of you are writing under the old course? Old course, okay, and the rest of you are writing under the new course, okay. Right, so one lot of excitement for the coming May-June attempt, you know. One, because you've got 26 days more to study. Right, and second, it's the first time कि अब MCQ भी है एग्जाम में, तो तुम्हारी तो डबल लॉटरी है. एक तो MCQ ऊपर से 26 दिन और मिल गए पढ़ने को, तो मस्त है सब एकदम. Okay, right. So MCQs is going to come for 30 marks, but in the RTP they've also put the correct incorrect. है ना, करेक्ट इनकरेक्ट भी है, तो करेक्ट इनकरेक्ट अगर 16 मार्क्स का आ गया एंड 30 मार्क्स का MCQ आ गया तो 46, you know, 50 marks of the paper will be more or less of an objective type only paper, right? And the remaining 50 marks is going to be the subjective, the theory part. वो 50 marks में भी I think के special audit है ना, institutional audit, जैसे new course में तो now you also have the bank audit and the cooperative society audit, right? And then you also have company audit questions which come over there. So these are like more scoring part of the paper. Inter level पे problem का आता है standards. And the standards become too much to handle at the intermediate level. Okay, and then writing skills, you know, where you are not, your group 2 gets struck. है ना, group 2 निकलने में बहुत दिक्कत होती है only because of audit. है ना, ऑडिट में स्कोर ही आगे नहीं बढ़ता है, ऐसा मैंने बहुत सारे स्टूडेंट्स के एक्सपीरियंस से सुना है, यू नो, दैट दे आर नॉट एबल टू गेट अ गुड स्कोर इन द सब्जेक्ट. Okay, so coming to the amendments for the intermediate audit May 19, as such if you look at the RTP May 19, I really don't see many amendments over there. What I see over there is like they have done a revision. है ना, पूरा company law का revision has been given in the RTP. Okay, so if you start with the chapter company audit, right, if you look into the chapter of the company audit, right, they've started with the qualifications and the disqualifications of the company auditor, right, they've started with the qualifications and the disqualifications of the company auditor, right, who is eligible to be appointed as an auditor of a company. One, it says if he is a chartered accountant. Right, one it says if he is a chartered accountant, and then it says also a firm. Practicing is firm where majority of the partners practicing in India, even they can be appointed in the firm name. And then subsection 2 says that firm also includes an LLP. Right, so individual, firm or LLP, those are the qualifications for the appointment of the auditor. Disqualifications, that is regarding who cannot be appointed as an auditor of the company. Right, section 141 subsection 3. What does it say? What are the disqualifications for the company auditor? A person shall not be eligible for appointment as an auditor, as an auditor of a company if he is a body corporate. Right, body corporate other than LLP. So LLP qualified. Right, body corporate, company, form of organization cannot be appointed to do the audit. Next one, officer or employee of the company. Right, so if you're an officer, employee of the company, can you do the audit of that company? No. C1, a person who is a partner or who is in the employment of an officer or employee of the company. A person who is the partner or who is in the employment of an officer or employee of the company. So partner of an officer, partner of an employee, employee of an officer and employee of an employee of the company. D1 is very important because we see lot of questions which come in the exam, 2 mark, 4 mark, 5 mark from disqualification D. Right. What does it say? Person, partner, relative, PPR. Right. Person, partner, relative. A person is disqualified to be appointed, shall not be qualified to be appointment as an auditor of a company if he or his partner or his relative holds any security of or interest in the company, holding company, subsidiary company, associate company, any other subsidiary of that holding company. Right? So 5 companies. Holds any security of or interest in company, holding company, subsidiary company, associate company and any other subsidiary of that holding company. However, the proviso says that relative can hold security up to the face value of rupees 1 lakh in the company. And if relative exceeds the amount, then grace period given for taking the corrective action within 60 days. Right, so if relative is holding 1,20,000 face value share, corrective action can be taken within 60 days. Right, so relative can hold security up to the face value of rupees 1 lakh only in the company. Right, then D, what does it say? Person, partner or relative is indebted to the company, holding, subsidiary, associate, any other holding of that subsidiary company for an amount exceeding rupees 5 lakh. So up to rupees 5 lakh for all 3, person, partner, relative, indebtedness allowed, and that too in all the 5 companies. Right, for security interest the exemption is only for the relative. Right, but for indebtedness the exemption is for all the 5 and for all the 3, person, partner, relative. And then 3, has given a guarantee or provided a guarantee on behalf of a third person. Yes, again up to rupees 1 lakh allowed. So in excess of 1 lakh, again he would be disqualified to be appointed as an auditor of the company. Right, then you have 141(3)(e). What is 141(3)(e)? A person or a firm is having any business relationship. A person or a firm is having any business relationship now with 6 companies. Subsidiary of associate also gets added in the list. Subsidiary of associate company. Here we had 5 companies. Now we have 6 companies. Subsidiary of associate also added. So if you are having a business relationship with the company, you cannot do the audit of that company. But there are 2 exceptions. One, commercial transaction for rendering services of a professional nature. And second, it says a commercial transactions as a customer in the ordinary course of business, and that too at the arm's length price. Right? These 2 commercial transactions are allowed. That will not be considered to be a business relationship. Right, that will not be considered to be a business relationship. One, if you are rendering services of a professional nature, or second, as a customer in the ordinary course of business. Then what is the F disqualification? Relative is a director or is in the employment as a director or a key managerial personnel of the company. Right, so relative is a director. So if your father is a director in a company, can you do the audit of that company? No. Relative is a director or is in the employment as a director or a key managerial personnel of the company. Then coming to G, CA is in full-time employment elsewhere. No company audits in the name of the CA. And if he is not in full-time employment elsewhere, then if he has exceeded the ceiling limit of 20 audits per person. So how many audits can be accepted by one CA? 20 audits. If he already has 20 company audits, then disqualified. He cannot be appointed as an auditor of the company. But while calculating the ceiling limit of 20 audits per person, which are the audits which are not to be counted? Audit of one person company, small company, dormant companies, private companies having paid up share capital of less than 100 crore are not to be counted. Private companies having paid up share capital of less than 100 crore, these are not to be counted, provided that these private companies had not made any default in the filing of the financial statements and the annual return. If there is a default, then that is to be counted as one of the audit. Right, so we have ceiling limit of 20 audits per person. And what is the limit for tax audit assignments? Right, 60 tax audits per CA, yes, per person. And for company audits, 20 audits per person. But while calculating the limit of 20, which are the audits not to be counted? One person company, small company, dormant company, and the private companies having paid up share capital of less than 100 crore. Right, then after G disqualification, you have the H. What does it say? Person convicted by a court for an offence involving fraud and a period of 10 years has not elapsed from the date of such conviction. Right, and then you have I. What does it say? A person neither directly or indirectly provides any of the following 9 services which are specified under section 144 to 3 companies: company, holding company, and the subsidiary company. Right, provides any of the following 9 services, then you are disqualified under section 141(3)(I). Which are the 9 services under section 144 which a CA cannot provide? Which are the 9 services under 144 which a CA statutory auditor of a company cannot provide? Accounting and bookkeeping, internal audit. Design and implementation of financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services, and any other kind of audit as may be prescribed. What are the 9 services? Section 144 which a statutory auditor cannot provide? Accounting and bookkeeping, internal audit. Design and implementation. Right, design and implementation of financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. Right, these services cannot be provided by the statutory auditor of the company. Right, they cannot be provided by the statutory auditor. And what if any of the disqualification is attracted after appointment? These are the 9 disqualification. They should not be attracted as on the date of the appointment. A, B, C, D, E, F, G, H, I. And if any of the disqualification is attracted after appointment, then 141 subsection 4. Right, there shall deem to be a casual vacancy in the office, the auditor shall vacate his office, and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. Right, any of the disqualification, if it is attracted after appointment, then what does it say? Right, the auditor shall vacate his office and such vacancy shall be deemed to be a casual vacancy in the office of the auditor. Right, then there is one more important point over there which is regarding the removal of auditor by tribunal or CG. Removal of the auditor by the tribunal or the CG, 140 subsection 5. Right, 140 subsection 5. One, you have 140 subsection 2 which is regarding resignation of company auditor. One, you have 140 subsection 2 which is regarding the resignation of the company auditor. If the company auditor resigns, then within 30 days from the date of resignation, the auditor needs to file form ADT 3 with company and ROC, and in case of a government company also with CNAG. Do you know that? 140 subsection 2. If the auditor resigns within 30 days from the date of resignation, he needs to file form ADT 3 with company and ROC. And if it's a government company, then also file it with the CNAG. Thoda sa word. Right, he also needs to file it with the CNAG. And now I am talking about removal of the auditor by the tribunal or the CG. What does it say? The tribunal either suo motu, that is on its own, or based on an application received from the CG or any person concerned. The tribunal on its own or based on an application received from the CG or any person concerned is satisfied. Satisfied what? That the auditor of the company has acted in a fraudulent manner or has abated or colluded in any fraud by or in relation to the company or its directors or officers. It may by order direct the company to change its auditors. What is the sentence? The tribunal either suo motu or based on an application received from CG or any person concerned, if it is satisfied that the auditor of the company has acted in a fraudulent manner or abated or colluded in any fraud. Abated means helped. Colluded in any fraud by or in relation to the company or its directors or officers, it may by order direct the company to change its auditors. So now see, tribunal can tell the company that you need to change your auditor. You understand? If the application is received from CG and the tribunal is satisfied that the auditor needs to be removed, right? The order has to be passed within 15 days and then the new auditor will be appointed by the central government. Such an auditor against whom the final order has been passed by the tribunal cannot be appointed as an auditor of any company for a period of 5 years and shall be liable under section 447. And the liability shall be of the firm and every partner of the firm who acted in a fraudulent manner or who abated or colluded. Right? So that's an important question. They'll ask a direct question in your exams. Removal of auditor by the tribunal or the CG. Right? Then you also know 143 subsection 12. What is 143 subsection 12? Right? Duty to report the fraud to CG. Right? If an auditor in the course of performance of his duties as an auditor has reasons to believe that an offence involving fraud which individually or in the aggregate exceeds 1 crore or above is being or has been committed against the company by its directors or officers, it shall report the matter to the central government in the manner as may be prescribed. And then we say if the fraud is less than 1 crore or if it is more than or equal to 1 crore. If it is less than 1 crore, then immediately but not later than 2 days, report the fraud to the audit committee, board of directors as the case may be. Right? And then also it says the matter is to be included in the board's report. The fraud is required to be included in the board's report. And if it is more than or equal to 1 crore, again immediately but not later than 2 days, report the fraud to the board of directors, audit committee, wait for their reply or observation for 45 days. If they reply within 15 days from the date of reply, you report the fraud to the CG. And if they do not reply, then within 15 days after the expiry of 45 days, you report the fraud to the CG in form ADT 4, addressing it to the Secretary, Ministry of Corporate Affairs, to be sent by registered post acknowledgement due or by speed post followed by an email confirmation of the same. And these provisions are also applicable to the cost auditor, section 148, and also applicable to the secretarial auditor under section 204. Right? Mutatis mutandis, as it is applicable to the cost auditor and also applicable to the secretarial auditor. Right? Then appointment of the company auditor. What does it say? Appointment of the company auditor. Right? Within, right, appointment of the first auditor for other than government company, right, for other than government company and for the government company. Other than government company, board of directors or the members. Government company, CNAG, board of directors or the members. Right, so first auditor other than government company can be appointed by the board of directors within 30 days from the date of registration of the company. However, if the board fails to appoint the first auditor, he will be appointed by the members within 90 days at the EGM. Government company, first power to appoint the first auditor has been given to the CNAG. They can appoint the first auditor within 60 days from the date of registration of the company. If CNAG fails to appoint within 60 days, he will be appointed by the board within the next 30 days. And if board fails to appoint within the next 30 days, he will be appointed by the members within the next 60 days. Right, appointment of first auditor other than government company and the government company. And casual vacancy other than government company, all casual vacancies shall be filled in by the board of directors within 30 days from the date of casual vacancy. All casual vacancies shall be filled in by the board of directors within 30 days from the date of casual vacancy. However, if the casual vacancy is due to the resignation of the auditor, it shall also be approved by the members at the EGM within 3 months from the date of recommendation of the board. If the casual vacancy is due to resignation, it shall be filled in by the board of directors, but within 3 months from the date of recommendation of the board, it shall also be approved by the members at the EGM. Right, and government company casual vacancy to be filled in by the CNAG within 30 days from the date of the casual vacancy. However, if CNAG fails to fill the casual vacancy within 30 days, it shall be filled in by the board of directors within the next 30 days, and then there is no further provision. Right, casual vacancy, government company has to be filled in by the CNAG or it has to be filled in by the board of directors. And what if at any AGM no auditor is appointed or reappointed? Section 139 subsection 10 says that the existing auditor shall continue to be the auditor of the company. Right, the existing auditor shall continue to be the auditor of the company. Right, the existing auditor shall continue to be the auditor of the company. Is that clear? Right, then you have rotation of company auditor. What is the applicability for rotation of company auditor? Right, section 139 subsection 2, listed companies, always applicable. Other than listed companies, unlisted public companies. Other than listed companies, unlisted public companies having the paid up share capital of more than or equal to 10 crore. Or all the private companies having the paid up share capital of more than or equal to 50 crore. Earlier this number was 20 crore. Now it has been amended to 50 crore. And third one, all companies having the borrowings or deposits of more than or equal to 50 crore. Right? Borrowings or deposits of more than or equal to 50 crore. You understand? So a private limited is having paid up share capital of 30 crore. But is having deposits, borrowings and deposits of 60 crore. Is rotation applicable? Is rotation applicable to a private limited? Paid up share capital 30 crore, deposits of 60 crore. Is rotation applicable? Rotation provisions, are they applicable to a private limited? Yes. Right, because any one of the condition exceeded. So though their paid up share capital is less than 50 crore, their deposits are more than 50 crore. So they cannot appoint an individual for more than one term of 5 consecutive years or a firm for more than 2 terms of 5 consecutive years. Right, rotation of the company auditor. Earlier it was 10, 20, 50. Now it is 10, 50, 50. Right, now it is 10, 50, 50. And now is ratification required for the appointment of the auditor at every AGM? No ratification required. Is ratification required for the appointment of the auditor at every AGM? No, ratification is not required. Right, ratification is not required. Right, this is section 139 subsection 2, the rotation of the company auditor. Then you have one more applicability, which is applicability of section 138, which is regarding the internal audit. Right, now Companies Act has made it mandatory for certain classes of companies to appoint an internal auditor. Who can be appointed as an internal auditor? CA or a cost accountant, is CA or CMA, whether engaged in practice or not. Which companies are required to appoint an internal auditor? One, listed companies, always applicable. Listed companies, compulsorily you have to appoint an internal auditor. Then apart from listed companies, second list, the unlisted public companies, and third one over there you have the private companies. Right, unlisted public companies having the deposits of more than or equal to 25 crore at any point of time during the preceding financial year, or having the paid up share capital of more than or equal to 50 crore as at the end of the financial year, or having the borrowings of more than 100 crore, not more than or equal to, more than 100 crore at any point of time during the preceding financial year, or having the turnover of more than or equal to 200 crore during the preceding financial year. And for a private limited company, only two conditions: borrowings of more than 100 crore or the turnover of more than or equal to 200 crore. Right, so again say, let me take an example, A Private Limited, right, having borrowings of 90 crore, having borrowings of 90 crore, but is having a turnover of 210 crore. Do they need to appoint an internal auditor? Borrowings of 90 crore, but turnover of 210 crore. Do they need to appoint an internal auditor? Yes, any one of the limit exceeded and they need to appoint an internal auditor. Right, any one of the limit exceeded and they need to appoint an internal auditor. Right, so rotation of the company auditor, 139 subsection 2. Then we talked about the section 138, which is regarding the applicability of the internal audit. Which companies are required to appoint an internal auditor, right? Which companies are required to appoint an internal auditor, right? So 141, first they are talking over there about the disqualifications and the qualifications of the company auditor, right? The qualifications and the disqualification. Then they've given the revision regarding the appointment of the company auditor, section 139. Right, the appointment of the company auditor, first auditor, casual vacancy auditor, subsequent auditor, right, all. Then the rotation of the company auditor, what did we say? 10, 50, 50. Earlier it was 10, 20, 50. Now it is 10, 50, 50. Right, the rotation of the company auditor. Right, the rotation of the company auditor. Right, provisions relating to audit committee. So one more applicability for us to study. One applicability we studied, 139 subsection 2. Second one, section 138. Third one, what is the third applicability? Section 177. Which companies are required to constitute an audit committee of the board? What does it say? Again, listed companies always. Apart from listed companies, every public company. Apart from listed companies, every unlisted public company, I can put it that way also, having paid up share capital of more than or equal to 10 crore, or having the turnover of more than or equal to 100 crore, or having the LBDD. What is LBDD? Loans, borrowings, debentures, deposits. Right, loans, borrowings, debentures, deposits, LBDD. Loans, borrowings, debenture, deposits of more than or equal to 50 crore. Right, so 10, 100, 50. Any one exceeded, they need to form an audit committee of the board. Right, they need to form an audit committee of the board. Right, so A Limited, yes, say, which is an unlisted company, having paid up share capital of 8 crore, but having the turnover of 120 crore. Do they need to constitute an audit committee of the board? Yes. Do they need to constitute an audit committee of the board? Yes, because paid up share capital more than or equal to 10 crore, or having a turnover of more than or equal to 100 crore, or having in the aggregate LBDD, loans, borrowing, debenture, deposits of more than or equal to 50 crore. Right, are required to form an audit committee of the preceding financial year. Right, then in this year you need to form an audit committee. Yes, at any time. For borrowings it would be any time, but paid up share turnover is anyways during the year, and paid up share capital at the last day. Okay, right, provisions relating to the audit committee. Right, then the manner, the auditor's remuneration will be decided by the Auditor's remuneration will be decided by the company in the general meeting or in the manner determined therein. So one, the members, when they appoint the auditors, they can decide the remuneration or they can delegate that power to the board of directors or to the managing directors. Removal of auditor. Right, removal of company auditor. I told you, this is an important one. I just discussed with you, removal of auditor by tribunal or CG. You remember suo moto, or on an application received from CG or any person concerned, if it is satisfied that auditor has acted, abated or colluded in any fraud. Right, then appointment of an auditor other than retiring auditor, ceiling on number of audits. What is the ceiling limit for number of audits? Not more than 20 companies other than one-person company, dormant companies, small companies and the private companies having paid up share capital of less than 100 crore shall not be eligible for appointment as an auditor. Right? So which are the audits which are not to be counted while calculating the ceiling limit of 20 audits per person? One-person company, small company, dormant company and the private companies having paid up share capital of less than 100 crore. Right? These are the audits not to be counted. Ceiling on tax audit assignments. What is the ceiling? 60 numbers. Right? 60 tax audits per CA. Right? Then right to access the books of account, right to obtain information explanation, right to exercise audit lien. Then the duties of the company auditor, right? We can discuss this one. This is an important one. So as such, if you see, these are not amendments. This is revision. You understand, no? What is given in the RTP is more of the revision, right? So section 143 subsection 1, which is regarding the duty as to enquiry. So 143 subsection 1 and 143 subsection 3. 143 subsection 1, duty as to enquiry. Will you always do the reporting on these points of inquiry? Will you always do the reporting? No, only if you have an adverse finding you will report, otherwise you will not report. But 143.3, will you always do the reporting on these points? Yes, whether you have a finding or not, you will always report on these 10 points. But 143.1, 6 points of inquiry, you will report only when you have an adverse finding. Right? What are the 6 points of inquiry under 143.1? Whether loans and advances made by the company, are they properly secured? And the terms and conditions thereof are not prejudicial to the company's interest. So loan advance given, what is the amount of loan? 20 lakh. What is the security taken? 2,000 rupees. 2,000 security value. What is the repayment schedule? 50 years. No, it is prejudicial. It's not in the best interest of the company. Transactions which are represented merely by book entries, again whether they are prejudicial. Fictitious journal entries, writing of assets, overvaluing the assets, right? Opening, closing entry, provision entries, fictitious journal entries being passed. Where the company is not an investment or a banking company, whether shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. Right? So shares, securities have been sold at a loss. You need to inquire, okay, what is the reason? Why did you sell your investments at a loss? Right? Then whether any loans and advances have been shown as deposits. Whether any loans and advances have been shown as the deposit. See, when I say I have given a loan to somebody, I can't say I have kept a deposit with somebody. दोनों बातें अलग-अलग होती है ना. Either you say you've given a loan or you say you've kept a deposit. You've given a loan to somebody and you're saying, हाँ मैंने उनके पास deposit रखा है. No, it's window dressing. Whether any loans and advances have been shown as deposits. Whether any personal expenses have been charged to revenue account. So some personal expenses are allowed to be charged to revenue account, but that which is not allowed as per company policy, still if they've been charged to revenue account. This point you require in your vouching answers, no? that whether any personal expenses have been charged to the revenue account, and where shares have been allotted during the year for cash, whether cash is actually received, and shares have been issued for consideration other than cash. In that case, whether the position shown in the balance sheet, is it correct, regular, and not misleading. Right, so these are the 6 points of inquiry. Direct question asked in your exams. Duty as to inquiry under section 143(1). Right, 6 points of inquiry. And under 143(3) you have the 10 points of reporting. Right, under 143(3), right, so these are the 6 points of inquiry. Loans and advances, book entry, shares, securities, debentures sold at a price less than, loans and advances shown as deposits, personal expenses, and shares have been allotted for cash or other than cash. Right, that is 143 subsection 1. Then duty to sign the audit report, and then I was telling you this, 143(3). One exam they had asked a direct question. What are the reporting requirements under section 143(3) of the Companies Act 2013? So main to duty kya hai auditor ka? To report on the true and fair view. And these are the additional reporting requirement, whether he has obtained the information explanation, whether proper books of account. What do you mean by proper books of account? Which give a true and fair view, double entry system of accounting, and accrual basis of accounting. Then branches which have been audited by a person other than company auditor, his report has been forwarded to the company auditor. Right, then balance sheet, profit and loss account are in agreement with the books of account. Whether financial statements comply with the accounting standards. Any observations or comments which have an adverse effect on the functioning of the company. Any directors are disqualified under 164(2). Any qualifications, adverse remarks regarding the maintenance of account. And whether the company, I point, is having the adequate internal financial controls with reference to financial statements. Okay, this is revise again, you know, R, amendment over there. Right, IFC, that is one new trending term nowadays, no, IFC. Earlier they used to call it as IFC with over financial reporting. Internal financial controls over financial reporting. Now what do they call it as? Internal financial controls with reference to financial statements. An auditor has to report whether the company has adequate IFC and also whether it is operating effectively. Right, so whether the company is having adequate internal financial control and also the operating effectiveness of such control. However, for which companies the auditor is not required to do the reporting on IFC? New thing, no? For which companies IFC reporting not applicable? Generally for all companies for which we express opinion true and fair. Now under 143(3)(I) we also have to do the IFC reporting. But for these companies, IFC reporting exempt. Which are the companies for which IFC reporting is exempt? It says private companies which are a one-person company or a smaller company. And those private companies having turnover of less than 50 crore or having the borrowings of less than 25 crore, no IFC reporting required to be done by the statutory auditor. You understand? Is IFC required by, do they need to have IFC? Yes. Do they need to have internal financial control? Yes. But is their statutory auditor required to do the reporting on IFC? No. For which companies? Yes, shall not be applicable to a private company which is a one-person company, smaller company, or obviously many and a private company which is one person, small, or a private company having turnover of less than 50 crore and having aggregate borrowings from banks and financial institution at any point of time during the previous year of less than 25 crore. So again, let me put a question. A private limited is having turnover of 39 crore. A private limited is having a turnover of 39 crore and is having borrowings from banks, financial institutions of 39 crore. Is IFC reporting applicable? Private company, which is one person, small company, or having turnover of less than 50 or borrowings of less than 25, IFC reporting not applicable. So now I've given you these numbers. A private limited having a turnover of 39 crore and having the borrowings of 39 crore. Is IFC reporting applicable? Yes. Is IFC reporting applicable? Yes. अरे दोनों लिमिट के अंदर होना चाहिए ना, एक भी लिमिट एक्सीड हो गया तो आईएफसी रिपोर्टिंग एप्लीकेबल. क्या बोला है? टर्नओवर ऑफ लेस देन 50 करोड़ एंड बोरोइंग्स ऑफ लेस देन 25 करोड़, एक भी एक्सीड हो गया लक्ष्मण रेखा, देन रिपोर्टिंग एप्लीकेबल. So in my example, though turnover is less than 50 crore, it is only 39 crore, but borrowing is 39 crore, which is more than 25 crore, and hence IFC reporting will be applicable. Do you understand that? Right. And then J point is the other matters. Pending litigations, material foreseeable losses, and delays in transferring amount to the Investor Education and Protection Fund. 143.12, did I just discuss with you? Duty to report the fraud to CG. 2 days, 45 days, 15 days, 1 crore or above, right, and less than 1 crore. Duty to report the fraud to CG, right, duty to report the fraud to CG, okay. Then CARO, right, they've also included over here the applicability of CARO. Right, what does it say? Companies Auditors Report Order 2016. Intermediate level, very surprising, they are directly asking you the clauses of CARO in the exam now. Number 18 exams it was seen. Right, so what is the applicability of CARO? That CARO 2016 shall apply to every company including a foreign company. So 2 mark question, no? CARO 2016 does not apply to foreign companies. Incorrect. It applies to every company including a foreign company except a banking company as defined under the Banking Regulation Act. Insurance company as defined under the Insurance Act. Section 8 company, one person company, smaller company. So banking, insurance, one person, small, section 8 company, and a private limited company. Not being a subsidiary or a holding of a public company. कि private का holding subsidiary है, ये private का subsidiary is a public company. So deemed a public company. है ना कि प्राइवेट लिमिटेड के ऊपर होल्डिंग कंपनी इज अ पब्लिक कंपनी या प्राइवेट लिमिटेड का सब्सिडरी कंपनी इज अ पब्लिक कंपनी, देन दैट प्राइवेट कंपनी इज अ डीम्ड पब्लिक कंपनी, देन कारो रिपोर्टिंग एप्लीकेबल. अपार्ट फ्रॉम दैट व्हाट डज इट से? पेड अप शेयर कैपिटल एंड रिजर्व्स एंड सरप्लस नॉट एक्सीडिंग 1 crore as on the balance sheet date. Total borrowings from banks and financial institutions not exceeding 1 crore at any point of time during the financial year, and total revenue as disclosed in Schedule 3 including revenue from discontinuing operations not exceeding 10 crore during the financial year. So again A private limited. A private limited, paid up share capital, reserves and surplus 80 lakh. Borrowings from banks, financial institution 90 lakh. Revenue 12 crore. Is CARO reporting applicable? Paid up share capital, reserves and surplus 1 crore. Borrowings from banks, financial institutions 1 crore limit, and revenue 10 crore. Now here 80 lakh, 90 lakh and 12 crore. Is CARO reporting applicable? Yes. For a private limited company, for CARO not to be applicable, all the 3 conditions should be cumulatively satisfied. So अगर ये 9 crore होता, तो फिर CARO would not have been applicable to a private limited. But any one of the limit exceeded and CARO reporting becomes applicable to the private limited company. Right, I'll just come to one MCQ, right, which is there in RTP May 19. Yes, question number 7. Eor Private Limited was incorporated on 1st of July. During the year 2018, the company did not opt for borrowing and has a total revenue of 60 lakh. तो borrowing तो है ही नहीं and revenue is only 60 lakh. CARO applicability के लिए revenue कितना चाहिए? More than 10 crore. तो है ही नहीं. At the year end, it provides the following information regarding paid up capital and reserves and surplus. Paid up capital. Yes, consideration received in cash for equity shares including unpaid calls 40 lakh, Preference shares 25 lakh, bonus shares 7 lakh, share application money received pending allotment 10 lakh, so 82 lakh. Balance in profit and loss 15 lakh, capital reserve 10 lakh, and grand total 1 crore 7 lakh. Right, and then they've given the limits of 1 crore, 1 crore and 10 crore. Right, considering the information given above, which of the following shall be considered as a reason regarding applicability or non-applicability of CARO 2016? A, B, C, D. Right, while calculating, the correct answer is C. Right, 0.92 crore. Why? Because while calculating paid up share capital and reserves and surplus, unpaid calls are required to be deducted and share application money received pending allotment is required to be deducted. So total is 1 crore 7 lakh minus 5 lakh minus 10 lakh, so minus 15 lakh. So that will bring it to 0.92 crore, and therefore it is not applicable, shall not be applicable, as paid up capital and reserves and surplus is 0.92 crore, that is not more than 1 crore as on the balance sheet date. Right, unpaid calls and the share application money pending allotment is not to be considered while calculating the limit of 1 crore. Right, this is there in RTP May 19. Right, the question is there in RTP May 19. Okay. Right, so let us go back further. Okay, so these are the companies which are exempt from the applicability of CARO. What does it say? Educating Child is a limited company registered under Section 8. Right, so Section 8 companies, CARO shall not be applicable to Educating Child accordingly. Right, because it is a Section 8 company. Right, then what are the matters to be included in the audit report? 16 clauses of CARO 2016. Right, each of the clause at intermediate level, you should at least be knowing what are the reporting requirement. What is the checking to be done, that they may ask, may not ask. But what is the trend seen right now? They are asking you the reporting requirement. Right, that what is the reporting required. Right, disclosure in the audit report, joint audit. Okay, right, let's come to SA 299. Right, the standard has been revised in the recent past. Right, so SA 299, joint audit of financial statements. Earlier the title of the essay was, anyways we don't need that, responsibility of joint auditors. Now it is joint audit of the financial statements. Okay, how should the joint auditors divide the total work of audit amongst themselves? अब सबको मिलके ऑडिट करना है तो कैसे डिवाइड करें? Yes, the joint auditors shall by mutual discussion divide the total work of audit amongst themselves. Right, so how should the joint auditors divide the work amongst themselves? The joint auditors shall by mutual discussion divide the total work of audit amongst themselves. And there could be some areas which they decide that we will not divide, we will all do the work together. So they have to decide upon the division of audit areas and also the common audit areas. Okay, which areas we will divide the work and which areas we will do the audit together. Or ek baar decide ho gaya, then they need to put it on a piece of paper. And that piece of paper is called as the work allocation document. Right, the joint auditors, once the division of work has been decided, what they need to do, they need to prepare a work allocation document. Right, the work allocation document on which it will be given, which joint auditor is going to do which area. Right, which is the common audit area, which are the divided audit areas. It should be signed by all the joint auditors and also communicated to the TCWG. Joint auditors, should they issue separate engagement letters and obtain separate representation letters? No, the standard has said very clearly. है ना, ऐसा नहीं कि 3 फर्म को अपॉइंट किया है तो तीनों फर्म अपना अपना एंगेजमेंट लेटर भेज रही है. व्हाट डज इट से? द जॉइंट ऑडिटर शुड ऑब्टेन अ कॉमन एंगेजमेंट लेटर एंड अ कॉमन रिप्रेजेंटेशन लेटर. Right, so common engagement letter, common appointment letter, and also the common representation, written representations, no, SA 580. Right, common written representations to be obtained. Okay, right. Then after that, this question we can expect in your exam. Factors to be considered in developing the joint audit plan. Right, never asked before. So again, revise, important one. Right, factors to be considered in the development. See, SA 300, we talk about factors to be considered in the development of an audit plan. Here we are talking about the factors to be considered in the development of the joint audit plan. Right, so what are the factors to be considered? One, identify division of audit areas and the common audit areas. Identify division of audit areas and the common audit areas. So accordingly, you will have to prepare your plan. And a division and the common audit areas. Then obviously when you prepare a plan, you should keep in mind what are the objective and scope of the engagement. So division and common, then the reporting objective. Right, then the reporting and objective. Then, yes, you are not going to put equal amount of effort for doing audit of all areas of financial statement. The joint auditors have to decide which area significant effort is required to be put by the members of the engagement team. You know, there is a concept called as RMM, risk of material misstatement. So obviously for those areas where they have assessed a higher RMM, they are going to put more effort. You understand? No, you might have realized now, okay, audit you have to put more effort. You understand? No. So those areas where significant, more effort is required to be put by the members of the engagement team. Then you also need to consider the results of the preliminary engagement activity. Preliminary engagement activities are discussed in SA 300, you know, for a recurring audit and for a initial audit. Right, so results of the PE and PEA, preliminary engagement activities, and the nature, timing and extent of resources required to complete the engagement. Generally what we know, nature, timing and extent of audit procedure. यहाँ पे क्या बोला है? Nature, timing and extent of the resources. That how many articles, how many CAs are required on the assignment. कितने दिन के लिए लगेंगे? Nature, timing and extent of the resources required to perform the engagement. Right, so what are the factors to be considered in the development of the joint audit plan? Division of audit areas, common audit areas. What is your reporting objective? And reasonable assurance. Reporting objective क्या होगा? Reasonable assurance. Overall objective SA 200. Right, then after that, which areas? More effort. Then the results of the PEA, preliminary engagement activities, and also the nature, timing and extent of the resources required to perform the engagement. You might have realized with your own experience, or before you get that experience, let me warn you beforehand, कि audit के paper में मन की बात नहीं लिख सकते हैं. You cannot write. Okay, तुम्हें लगता है कि यार joint audit का अगर plan बनाना है तो मुझे ऐसे लगता है कि ये सारी बात तो consider होनी ही चाहिए. Who has asked you? They have not asked as per you what should be the factors. They are asking as per SA 299 what are the factors. Okay, so your man ki baat you tell somebody else, but don't tell it to the examiner. And to the examiner you will tell the subject, the syllabus ka baat. Okay, so this question has not been asked, and old standard mein ye nahi tha, joint audit plan, right? So they could ask a question on this one, right? Factors to be considered in the development of the joint audit plan. Right, then generally for work with it is what you say, the division of joint auditors, the sharing of responsibility by joint auditors can be divided under two. One, for work which is divided, the respective joint auditor will be responsible. And what are the areas where the joint auditors are jointly and severally responsible? Has been asked several times before, and they can repeat the question. Right, areas where the joint auditors are jointly and severally responsible. What are the areas where they are jointly and severally responsible? One, obviously for work which is not divided. and work which is not divided. They are going to be jointly and severally responsible. Then matter relating to all the joint auditors brought to the attention by one of the joint auditors. Then deciding upon the nature, timing and extent of the audit procedures for the common audit areas. Execution will be the responsibility of the respective joint auditor, but deciding upon the procedure jointly and severally responsible. What heading am I discussing with you? What are the areas where the joint auditors are going to be jointly and severally responsible? So for work which is not divided, all of us are responsible. Deciding upon the procedure for common audit areas, all of us are responsible. Matter relating to all brought to the attention by one of the joint auditor, all of us are responsible. And then financial statements, presentation and disclosure of the financial statements and the audit report. Who is responsible? All of us are responsible. Whether financial statements comply with the requirement of the statute, whether presentation and disclosure of financial statements is as per the AFRF, and whether the audit report complies with the statutes and the pronouncements of ICAI. Right? So 3 plus 3. And 6 points. For areas where the joint auditors are jointly and severally responsible. For those areas where the joint auditors are jointly and severally responsible. Right? So very important, SA 299. What is 299? The joint audit of the financial statements. Okay. Then branch accounts. Right? Then using the work of another auditor. Right? What is the evaluation that you do of the work of the other auditor? SA 600. It's using the work of another auditor, that is the branch auditor. Right? SA 600, 610, 620. No. Branch auditor, internal auditor, auditor's expert. 600 also 143 subsection 8, which is regarding branch audit. Right, what is the evaluation you need to do of the other auditor? Consider the professional competence of the other auditor if he is not a chartered accountant. Coordinate with the other auditor while planning the work. Consider the significant findings of the other auditor. Advise the other auditor as to the significant accounting, auditing and reporting requirements. Discuss with the other auditor and visit the branch of the company if required. You know, one exam some time back, but that in one exam, I don't remember the question number, but say it was question number 4. Question number 4A, SA 610, 8 marks. And question number 4B, 600, 8 marks. And that is how they had asked the question. And in both cases, they had asked the evaluation. Why do you need to do the evaluation? CTBR, continues to be responsible. Even though if you use work of branch auditor, internal auditor, auditor's expert, statutory auditor continues to be responsible. Sole responsibility for the audit opinion expressed. So right now, I have only given you the keywords for SA 600 for doing the evaluation of the work of the branch auditor. तो जब आपको branch auditor का work use करना पड़ता है तो आपको ये सारे procedure follow करना पड़ता है. You have to check their competence, you have to coordinate with them, you have to consider their finding, you have to advise them as to the significant accounting, auditing, reporting requirements, you have to discuss with the other auditor, and you may also visit the branch of the company. Can the principal auditor visit the branch of the company? Yes. Can he have access to the working papers of the branch auditor? No. What does it say? Working papers, it is the property of the auditor, branch auditor. He may at his discretion make portions of or extracts from his working papers available to the client without undermining the validity of the work performed. But as such, working papers, audit documentation is the property of the auditor. Right, then they are talking about the cost audit, section 148 of the Companies Act 2013. Right, which companies, it says having an overall annual turnover of 35 crore or more are required to include cost records in their books of accounts. Turnover, regulated, non-regulated sectors are given, and if they are having a turnover of 35 crore or more, they are required to maintain cost records. And उन cost records का cost audit कब होगा? When it says, no, audit kab hoga, I'm not talking about the exemption, I'm talking about the applicability of cost audit. For regulated sectors, if the overall turnover exceeds 50 crore and individual product service turnover exceeds 25 crore. And for non-regulated sectors, if overall turnover exceeds 100 crore and the individual product service turnover exceeds 35 crore. So for regulated sectors, 50, 25. For non-regulated sectors, 135. Then for the cost records which you have maintained, you have to get a cost audit done. And this could be a direct short note in your exam. Write short notes on applicability of cost audit. Right? Write short notes on the applicability of the cost audit. Right? So regulated 50, 25, non-regulated 135. Who can be appointed as a cost auditor? CMA, individual or a firm of CMAs in practice. Yes, then this one. Right? What certificate is required to be obtained from the cost auditor before his appointment? This is asked as a retail question in the exam. What certificate, just as from the statutory auditor before his appointment you take his written consent. Similarly, from the cost auditor also you need to obtain a certificate. What certificate? That they are eligible for appointment and not disqualified under Companies Act or the Cost Act. Right, then the individual or the firm satisfies the criteria under section 141. The appointment would be within the limits and the details of any proceedings going on against the cost audit firm. Right, this is the question put in one of the RTPs. What certificate is required to be obtained from the cost auditor before his appointment? That they are not disqualified, that they are eligible to be appointed, that the appointment would be within the limits and the list of any proceedings going on. Right, the list of any proceedings going on. Is that right? Certificate to be obtained from the cost auditor before he is appointed by the, who appoints the cost auditor? मन की बात नहीं बोलना है, मैंने अभी बताया है. Board of Directors. Who appoints the cost auditor? The Board of Directors within 180 days from the commencement of the financial year. Right? So appointment of the cost auditor requires the companies to appoint an auditor within 180 days from the commencement of the financial year. And before his appointment, a written consent is required to be obtained from the cost auditor. Right? Before his appointment, a written consent. Who will fill the casual vacancy? Again, the Board of Directors. Right? Again, the Board of Directors. Cost auditors, they report to the Board of Directors. And Board of Directors within 30 days from the date of receipt of the cost audit report, file a copy of the report with the central government. And this is the exemption from cost audit which you were telling me. And a cost audit not to apply in certain cases. What ऊपर जो हमने देखा 50, 25, 135, that was the applicability of cost audit. This is the exemption from cost audit. If it is operating in an SEZ or more than 75% revenue is coming from exports in foreign exchange or is engaged in the generation of electricity for captive consumption through a captive generating plant. Right, so exemption from cost audit, though these companies, they might have to, they are required to maintain cost records. They are exempt from the cost audit. They have to maintain cost records, but no cost audit required to be done. What does it say? Operating in an SEZ or for more than 75% revenue is coming from exports in the foreign exchange or which is engaged in the generation of electricity for captive consumption through a captive generating plant. Then 147 is the punishment for contravention. Right, so if you don't comply with section 139, appointment of company auditor, if he does not comply. 143, rights and duties of company auditor. 144, auditor not to render certain services. 145, auditor to sign the audit report. What is the punishment? Which shall not be less than 25,000 rupees to 5 lakh rupees. पहले इतना ही था, अब क्या add कर दिया है और 4 times the remuneration of the auditor, whichever is less. And if it was with fraudulent intention, with an intention to deceive, then what does it say? 50,000 or 25 lakh rupees. And another one added over there, 8 times the remuneration of the auditor, whichever is less. right? So 4 times and 8 times the remuneration of the auditor, that has been added over there. And then they talk about the contents of the audit report, right? So audit report SA 700, 701, 705 and 706. Forming an opinion and reporting on financial statements, communicating key audit matters in the independent auditor's report, modifications to the opinion in the independent auditor's report, and the emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. What are the contents of the audit report? Title, addressee, opinion. Opinion, first the introduction, we have audited. Right? Then express an opinion. Then basis for opinion. Title, addressee, opinion, basis for opinion. Then going concern, key audit matters, if any. Then management's responsibility, auditor's responsibility, other reporting responsibilities and signature, place and date. है ना? Title, addressee, opinion, basis for opinion, going concern, key audit matters, if any. Then management's responsibility, auditor's responsibility, other reporting responsibility. Other reporting abhi humne dekha tha na 143 subsection 3. Right? And then you have the signature, place and date. Right? Signature, place and date. Yes, when does the auditor modify his opinion? One, when the financial statements are not free from material misstatement. That means there is a material misstatement. That means there is a material fraud or error which has been found by the auditor. Or when the auditor is unable to obtain the sufficient appropriate audit evidence. He needs to consider the pervasiveness. So material but not pervasive or material and pervasive. Right? And then material misstatement, material but not pervasive, qualified. Material and pervasive, adverse. And unable to obtain evidence. Material but not pervasive, qualified, material and pervasive, disclaimer. Qualified opinion, true and fair except for the effect or except for the possible effect. Adverse opinion, not true and fair. And disclaimer, we are not in a position and we do not express an opinion. Right? We are not in a position and we do not express an opinion. Right? We do not express an opinion. Right? Modified opinion. Right? Then they've given the contents of the audit report. Right? Basis for opinion paragraph could be a retail question in the exam. What do you write in basis for opinion paragraph? We've conducted our audit in accordance with the standards on auditing. Then the reference to that section of the audit report where the responsibilities of the auditor have been given. Then we comply with the ethical requirements including independence. And also we believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for our audit opinion. You know, old format of the report, while exam and short note they had asked, write short notes on introductory para in the audit report. So, name of entity, the title of each financial statement, fact that an audit is being conducted, the notes and the date or period covered. ये 5 point थे introductory para के, अभी भी है जो opinion में first para लिखते हैं. So now ये new है ना, ये old format में नहीं था. So they can ask this as a retail question in your exams, right? Basis for opinion, standards on auditing, reference to that section where the responsibilities of the auditor have been given, ethical requirements and sufficient appropriate audit evidence, right? SRES, basis for opinion, yes, paragraph in the audit report. Right, then the responsibilities, then the auditor's responsibility for the audit of the financial statements. Right, so the section giving the auditor's responsibility. Then the signature, place and date. Right, modifications. What does it say? Unmodified report, modified report. Modified report, yes, what does it say? Further emphasis of matter, other matter and key audit matter. Right? Emphasis of matter, anything which is fundamental to the user's understanding. Other matter, anything which is relevant to the user's understanding. And key audit matters, matters which were of most significance in the audit of the financial statements for the current period. And here QO, AO and DO. Right? So, for anything to come in the audit report, 6 darwaze hai. है ना, अगर आपको ऑडिट रिपोर्ट में एनीथिंग यू वांट टू पुट, देयर आर 6 गेट्स विच आर अवेलेबल. एक 3 गेट तो क्या है, या तो क्वालिफाई, एडवर्स और डिस्क्लेमर. सो यू पुट इट इन बेसिस फॉर क्वालिफाइड ओपिनियन, बेसिस फॉर एडवर्स ओपिनियन और बेसिस फॉर डिस्क्लेमर ऑफ ओपिनियन, और यू कैन पुट इट इन एनी ऑफ द 3 मैटर पैराग्राफ. Emphasis of matter paragraph, other matter paragraph, or the key audit matter paragraph, right? Or the key audit matter paragraph, right? Qualified, adverse and disclaimer, which type of opinion is appropriate. Then emphasis of matter and the other matter paragraph, right? And then let's just quickly go through SA 701, which is regarding the key audit matters, right? Key audit matters, trending, no? अभी latest है ये, है ना, तो जैसे बोलते हैं ना आजकल इसका ट्रेंड है, तो दिस इज ट्रेंडिंग, है ना. SA 701 कम्युनिकेटिंग की ऑडिट मैटर्स इन द इंडिपेंडेंट ऑडिटर्स रिपोर्ट, राइट. सो की ऑडिट मैटर्स आर दोज मैटर्स that in the auditor's professional judgment were of most significance in the audit of the financial statements for the current period. And key audit matters are selected from the matters communicated to TCWG. Where do we communicate matters to TCWG? SA 260. And from that you are selecting the key audit matters. Right? You are selecting the key audit matters. Like, you faced a lot of difficulty in applying an audit procedure, or there was too much of effort required in doing the audit, or you had a big disagreement with the management. Can you imagine कि आपका मैनेजमेंट के साथ बहुत बड़ा झगड़ा हो गया, डिसएग्रीमेंट हो गया, और you faced a lot of difficulty in applying audit procedure, and that you could write an audit report? It was not possible before. You can't put a qualified opinion for that. You can't give an adverse or a disclaimer. You can't put it under emphasis of matter paragraph because it is not anything which is included in financial statements. It is not other matter, but it comes under the key audit matter. It is a matter of most significance, right, in the audit of the financial statements for the current period. Okay, this is one question which we are seeing in the RTP. Purpose of communicating key audit matters. Why to communicate key audit matters? So 3 reasons it gives. 1, it enhances the communicative value of the audit report. Second, it assists the intended users in understanding those areas which in the auditor's professional judgment were of most significance in the audit. And third, it assists the intended users in understanding the areas of significant management judgment and also in understanding the entity. So 3 points, you have to learn this, okay? Right now I'm just showing it to you, but at least now you will come to know what is important. So 3 points and purpose of communicating key audit matter. It enhances the communicative value. It assists the intended users in understanding कि वो ऐसी कौन सी areas थी जो auditor के हिसाब से most significance वाली थी. And also assist the intended users in evaluating significant management judgment and understanding the entity. Right. Determining key audit matter. How do you determine कि अरे यार ये तो बहुत बड़ी बात है, ये most significance की बात है. Obviously when it has been assessed to be higher RMM or significant risk, or significant auditor judgment has been involved for doing the audit of that area, and the effect on the audit of the significant event or transaction. Determining key audit matters again are, है ना. So what is a key audit matter, है ना. First ये क्या था, what is a key audit matter, then why to communicate key audit matters, purpose of communicating the key audit matters. Then next one, how to decide that it is a key audit matter, determining key audit matters. Right, so higher assessed RMM and significant risk, significant auditor judgment, and the effect on the audit of significant event or transaction. How do you communicate a key audit matters? You write that matter in the audit report regarding why it is a key audit matter and how the matter has been resolved. Right? Why it is a key audit matter and how the matter has been resolved. Right. Key audit matter is not a substitute for, again R. देखो लॉजिक बहुत सिंपल है. 701 में कुछ 5-6 क्वेश्चंस है, वो 5-6 में से एक आएगा. 1:5, 1:6 है ना. तो व्हाट डज इट से? ऑडिटर से डरी यार मुझे ना ओपिनियन मॉडिफाई करना है, इनका इन्वेंट्री इज ओवर वैल्यूड बाय 2000 करोड़. इसे छोड़ो, अभी नया रिपोर्ट, नया पैराग्राफ आया है ना की ऑडिट मैटर, वो ट्राई करते हैं. यू अंडरस्टैंड ना? आपको यू गो टू समवेयर एंड यू कम टू नो कि ये नया चीज है तो ये ट्राई करते हैं. यहाँ पे ऐसे थोड़ी हो सकता है. When you were supposed to modify your opinion, instead of modifying, can you put it in key audit matter? No. When there was a material uncertainty related to going concern, rather than putting a going concern paragraph, will you put it in key audit matter? No. Where disclosures were required in accordance with AFRF, instead of the disclosures, can you put it in key audit matter? Where a separate opinion was required, instead of issuing separate opinion, can you put it in key audit matter? No. It says key audit matter is not a substitute for, disclosures required in accordance with the AFRF, is not a substitute for expressing a modified opinion, is not a substitute for material uncertainty regarding going concern, and is not a separate opinion on individual matters. It is not a substitute. Right? What does it say? Scope of this essay. Okay, what is not a key audit matter? Right? So where a separate opinion is required, where a separate disclosure is required, where a modification to opinion is required, when there is a material uncertainty regarding going concern, don't put it in key audit matter, put it in those different ones. Right? So that is circumstances. What does it say? When it's not a substitute for the disclosures in the financial statements. Right, is not a substitute for the disclosures. And when key audit matters are not to be communicated, one, it says when law regulation precludes disclosure. कि you know it's a key audit matter, फिर भी आप नहीं डाल रहे हो, still you're not putting it in the audit report in key audit matter. Why you're not putting it? Because law regulation precludes disclosure, or the adverse consequences of doing so will outweigh the public interest benefits of such communication. That is, it will do more harm than good. Okay, right. So mainly I had to cover the amendments, but if you look at it very honestly, there is hardly any amendment as such over there. Right? It is mainly all the, right, what do you say, the more of a revision which has been given over there. Right? It is mainly the revision which has been given. Then payments controlled under the Companies Act 1/143(1). Then for certain transactions, even the board of directors require the special resolution of the general meeting. Right? Sell, lease or dispose of whole or substantially the whole, invest money in trust securities, borrow money in excess of paid up capital and free reserves, or remit or give time for repayment of any debt due by the director. Right? Then contribution for charitable purposes, what does it say? If it exceeds 5% of the net profits, then resolution required in the general meeting. Up to 5%, the board of directors can contribute for charitable purposes. Right? Then political purposes, a government company can never contribute. ये आता है ना correct incorrect में. Government company can never contribute. And other than a government company, what does it say? Which has been in existence for not less than 3 financial years. Right? Then it can contribute 7.5%. Right? Of the average net profits of the immediately preceding 3 financial year for political purposes. And National Defence Fund, what does it say? Any company, any amount, they can contribute to the National Defence Fund. But ये जो है payments controlled by the Companies Act, this is mainly for the old course. New course vouching verification chapter में ऐसा कुछ नहीं है. And this is mainly for the old course. Nothing of this type is there in the new course. Right? The payments controlled by the Companies Act. Okay, right. So just as a concluding remark, probably we can just revise all these standards which are there for your exams. Right? So you have the 200 series, then the 300, 400 series, 500, 600 and the 700 series. right? Only these series applicable for your exams, and you have one SQC 1 and a standard on quality control 1 which is also applicable, right? So 200 series, SA 200. Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. 210, agreeing the terms of audit engagement. 220, quality control for an audit of financial statements. This 220 corresponds to SQC 1. SQC 1 is for the entire firm, SA 220 is for a particular audit. SA 230, audit documentation. 240, the auditor's responsibilities relating to fraud in an audit of financial statements. 250, consideration of laws and regulations in an audit of financial statements. 260, communication with those charged with governance. 265, communicating deficiencies in internal control to those charged with governance and management, the letter of weakness. 299, joint audit of the financial statements. Then 300, right, planning and audit of financial statements. 315, identifying and assessing the risks of material misstatement through understanding the entity and its environment. 320, materiality in planning and performing an audit. 330, the auditor's responses to assess risks. 402, audit considerations relating to an entity using a service organization. And 450, evaluation of the misstatements identified during the audit. 500, audit evidence. 501, audit evidence, specific consideration for selected items. 505, external confirmations. 510, initial audit engagements, opening balances. 520, analytical procedures. 530, audit sampling. 540, auditing of accounting estimates, including fair value accounting estimates and related disclosures. 550, related parties. 560, subsequent events. 570, going concern. 580, written representations. Okay. 600, using the work of another auditor. 610, using the work of internal auditors. 620, using the work of an auditor's expert. 700, forming an opinion and reporting on financial statements. 701, communicating key audit matters in the independent auditor's report. 705, modifications to the opinion in the independent auditor's report. 706, emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. 710, comparative information, corresponding figures and comparative financial statements. 720, the auditor's responsibilities relating to other information. And then I told you, you have SQC 1, quality control for firms that perform audits and reviews of historical financial information and other assurance and related services engagement. Right, so in your exams they also ask you what are the different types of engagement standard. So then you should know SA, SRE, SAE and SRS. Then they ask you what are the objectives and functions of the AASB. Right, the Auditing Assurance Standard Board, right, the board which issues the various standards on auditing. Right, so those types of questions also come. So obviously students को लगता है बाप रे ये standards के नाम और number भी आते हैं तो मुझे बहुत audit आता है, but वो गलत impression है. You understand? No. The starting point is that you should know the basic के ये standards है. Then this is your control sheet. है ना कि you should see कि at least इतना तो देखो कि इन standards से past exam से कौन से questions आए हैं at intermediate level. And then whether basically you know the minimum content of these standards. Okay, so that completes my discussion regarding the discussion for RTP May 19. Okay.